measurement approaches where the focus is mostly on the risk adjusted return on capital, how it is being used typically for allocation of economic capital. One important see, when we are finding out the economic capital, and after that I have to allot this economic capital to each project level or to each business unit level, right? Once I determine the economic capital at a firm level and I want to allocate it at a business unit level or to a particular risk type, what are the mechanisms that I typically have? So that is what is being looked at. Especially there is a differentiation that we are going to look at between the loan products which are there with the bank along with the non-loan products. When I say non-loan products, there could be some kind of investments which the bank has done or some other kind of assets which the bank is having. So for each of them, how do I typically go ahead in terms of allocating this economic capital? And generally the allocation is done based on the risk adjusted return on capital kind of a mechanism. So that's where we'll try to spend some time in terms of understanding in more detail on this risk adjusted return on capital. To start with, if I am going with this measure, as we all understand, very straightforward, risk adjusted return on capital. In normal case, when I say return on capital employed, this is at an organization level. Now, when I am looking at multiple projects, each project could be having a different level of risk. Now, what I want to know is, because this is having different levels of risk,